Pete, the big news, obviously, is the new president of the United States, Joe Biden. It was quite a bounce in the share markets yesterday. That may well continue today. We'll have to wait and see. But what do you make of that, and what is the outlook for stocks moving forward?
Yeah, well, thanks, Pete. The interesting thing is that since Joe Biden's been president-elect, the market was up over 12%. Now, you can recall when you were covering the pre-election period in the US, the suggestion was that Wall Street didn't like the idea of Joe Biden winning. It was going to be a negative for the stock market. And what I think the market has focused on is two things. One is that the stimulus spending by the Biden camp is going to be much bigger than what President Trump would have offered. And secondly, you've got the vaccination coming in quicker than expected. I guess you could throw a third thing in there as well, and that is the fact that Democrat presidents since 1900, every Democrat president has had a massive impact on the stock market, except for FDR, Franklin D Roosevelt, during the Great Depression. So the Democrats, actually, because they are spenders, actually do work through building up consumption, helping company profits that way, as opposed to giving business incentives to the big end of town. And the interesting thing is the market's buying at this point in time.
Yeah, okay. We'll see how long that lasts for. Meanwhile, and this story would have been bigger yesterday, I'm sure, if it wasn't for the inauguration. But you can see in the bottom of your screen there, unemployment falls to 6.6% in December. How's that happened so quickly, Pete?
Yeah, it is quite extraordinary. When you put together, the fact that the budget deficit, remember, was what, $213.7 billion, enormous fiscal spending in Australia, one of the biggest as a percentage of GDP in the world. You've got the interest rates at historically low levels. You've got this, you have to say, I know I'm saying very jingoistic here, but it's been a brilliant performance fighting the coronavirus. We're the third best country in the world. Unfortunately, New Zealand's number one, Taiwan's number two, and we're number three. So that's a very important economic implication as well. And we're doing this with borders still not completely open. Imagine what's going to happen when borders do open.
Yeah.
And remember, it's 69. I've told you before, we spend historically about $69 billion a year when we go overseas. That money's here, and that's why Bunnings and Harvey Norman and JB Hi-Fi are reporting so strongly.
Yeah. Meanwhile, Pete, on Wednesday we were talking about this Hospo Keeper. It's the hospitality industry. It's their version of an extension of JobKeeper. Similar rates too. Wants it to go for another 6 months, but it's been kiboshed by the Treasurer.
Yeah, you got to remember, Pete, and I must admit, I thought he would do it, but I think these job numbers have given a lot of confidence. Unemployment as to worst was 7.5%. It's now down to 6.6. I see the St George economics team think it'll be 6% by the end of the year. And so remember this, a Treasurer is supposed to be Scrooge on wheels. This is what a Treasurer is. Not supposed to be the generous godfather that Josh Frydenberg became because of the recession.
Yeah.
And now he's getting these big wins. I think he's just coming back. He's Scrooging himself in a sense, and he's going to start playing hardball wherever he can to try and drag that $213.7 billion down. My EFO showed us we're closer to $194 billion because the economy is doing well. The stronger the economy goes, the better this number is going to come down. And he'll look like a genius comes next budget time if that number is substantially smaller.
Okay, Peter Switzer, we're going to leave it there. But thanks for your time. Have a good weekend. We'll talk to you soon.
Cheers, mate.